Press the bell icon on the YouTube app and never miss another update.
See, the main topic that I intend to start with is portfolio management. But I don't want to start with portfolio management till we have not done a preliminary discussion about the capital markets. Yes, it is very much possible that you are already dealing in capital markets. You might be dealing in the primary market or maybe the secondary market or maybe both. But at the same time, it is highly likely that you are still a student. You are still a beginner. Maybe you are someone who is observing the capital markets, but you have still not started your journey with capital markets. So before I start with portfolio management, I intend to do a preliminary discussion about the capital markets. In this particular episode, I will like to discuss what exactly do we mean by a capital market and what do we mean by a primary market. So let us introduce ourselves to capital markets. In this episode and a few more other episodes, I will introduce you to capital markets. After having a thorough introduction of capital markets, then we will start with portfolio management. You will enjoy portfolio management much more knowing what are the basic concepts of capital market. So let us start our discussion with what do we mean by a capital market. So let's discuss this particular point. Right, we are asking ourselves the most basic question. What is the meaning of capital market? What do we mean by capital market? When someone uses this term capital market, what do we mean by that? Okay, we understand capital market as market for long-term securities. When I say market, I mean a place where buying and selling takes place. Okay, now we are saying it's a market for long-term securities. Again, what do we mean by long-term? When can I say it is a long-term security? Long-term security means you must have a maturity of 1 year or more. If your security has a maturity of 1 year or more, we can consider that as a capital market security. And the market in which such capital securities can be traded, I will call it as a capital market. As against capital market, we have something also known as a money market. Okay, there is one thing which is known as money market, another is capital market. We can even use the terms money market instruments and capital market instruments. The instruments which are purchased and sold in the money market, those are money market instruments. And the instruments, or we can say securities, which are purchased and sold in the capital market, they are the capital market instruments. So what is a money market then? As you can see, market for long-term securities is capital. That means the market for short-term securities will be a money market. So I will understand money market as market for short-term securities. Long-term, you already know 1 year or more. So what do you understand by short-term? Short-term will be a maturity ranging from 1 day to a maximum of 1 year. So if your security has a maturity of just 1 day or maybe few months, we will consider that as a money market instrument. Such instruments will not be traded in the capital markets. But the moment you think about securities like shares, securities like bonds, debentures, these are securities which will have a maturity of more than a year. So the market in which such securities are traded, a market in which buying and selling of shares will take place. When I say shares, I mean both equity shares as well as preference shares. Even the market in which bonds will be purchased and sold, right? A bond will normally have a maturity of more than a year. So let us say a company has issued a 5-year bond. A company is planning to issue 10 years debentures All these are money market instruments, and the market in which such securities will be purchased and sold, I will consider that as the capital markets. Okay, so that's what we mean by a capital market, a market for long-term securities. Let us now understand the segmentation of the capital markets. Yes. The point I am discussing is segmentation of capital markets. Yeah, the capital markets, whether in India or outside India, the capital markets are segmented into primary and secondary. Even in my introduction, I was suggesting that maybe you are dealing in the primary market or the secondary market, or maybe both. So the next question that arises is that what segment of the capital market will be considered to be primary and what will be considered to be the secondary. In this particular episode, we are going to simply discuss what do we mean by a primary market. Okay, so let's try to understand the primary market. What do you mean by primary market? Or what do you mean by the primary segment of capital markets? Yes, primary market is understood as a segment, right? We say this is that segment in which securities are created. So when we say primary market, we mean that segment of capital market where securities are created. Although I said that I will be discussing only the primary market, but you can very well understand what do we mean by secondary market now. Secondary market is the market where securities will not be created, but the securities already created will be traded. So in secondary market, only buying and selling of securities is taking place. I cannot create any new security in the secondary market. Creation of securities happens only in the primary market. Again, I'll remind you that when we say securities, we do not mean only equity shares. You know, many a times when we think about portfolio management, we are like, okay, it's only dealing with shares. No, primary market is a broad term, right? By primary market, we mean a market where all types of long-term securities will be created. It can be equity shares, it can be preference shares, it can be bonds, it can be debentures. Any security that is having a maturity of more than a year, I will consider that as a capital market security. So, are you issuing the securities for the very first time, right? When we issue the securities for the very first time, we call it as an initial public offer. I'm 100% sure you must have heard the term IPO, right? By IPO, we mean, right? By IPO, we mean it's an initial public offer. When you are offering your securities for the first time to the public at large. See, this is one way in which a security can be created. We are saying that this is the segment in which securities are created. So obviously the question that arises is, how will these securities be created? So one way in which the securities can be created is by way of a public offer. We are offering our securities to the public at large. So let us say it is a private limited company. It is planning to go public now. So it will offer its shares to the general public at large. So you are going to create a security, and this security is going to be applied for by the citizens of the entire country. We consider this as a public offer. If you are issuing shares for the first time to the public, we will consider that as an initial public offer. It's also very much possible that you have already issued the security in the past. You are now coming up with a new public offer. That is also possible. Then that we will call simply as a public offer. When you offer shares for the first time, or when you offer securities for the first time, only then we say it is an IPO. But yes, this is one major way in which securities can be created. So when you are asking me how will the securities be created, the first possible way is by offering it to public at large. So that is one possibility. Normally, you will tap the public at large when the requirement of funds is huge, right? You are planning to venture into a new business which requires a tremendous amount of investment, or you are planning to launch a new product, or you are planning to expand your business and you require funds on a large scale. That's when you will plan a public offer. But if the requirement of funds is not that huge, then I may not approach the public at large. I may approach certain high net worth individuals, or I may approach qualified institutional bidders. I can privately arrange funds from them. So this is yet another way in which a security can be created. So this time I will not approach the public at large. Instead, I am going for a private placement. That is also one way in which securities can be created. So basically, we are asking ourselves that what are the different ways in which securities can be created. The first, as I said, you can go for public offer. Not necessarily every time I will do that. I can also go for what is popularly known as private placement, isn't it? If you are following the news, you know it very well that how Reliance Industries is selling certain stakes of its Geo platform and raising money. When you say that Facebook has invested in the Geo platform, now that has not happened through a public offer. This is what we call as a private placement. It's also many times possible that certain mutual funds may invest in your company, or certain foreign funds may invest in your company. So these are what are popularly known as qualified institutional bidders. I may privately sell the shares of my company to such qualified bidders. This also, to a certain extent, can be understood as a private placement. Okay, what are more different ways in which we can create securities? Yes, think more about it. What do you say? Even a rights issue is also a possibility, isn't it? For example, you are an existing company, you can approach your existing shareholders. You can tell your existing shareholders that, see, we are in need of money, and you can go for sell of shares to them. Even here also, you can take an example of Reliance once again, because Reliance Industries has just recently successfully completed a rights issue. So what's the difference between public offer and rights issue? In public offer, I am approaching the public at large. But when I approach only my existing shareholders, for example, you are my existing shareholder, I tell you that these are the shares that you can subscribe for, then it will be understood as a rights issue. So if you are my investor, you can apply for shares. Yes, you can even renounce the right in favor of your friend or someone known to you. That is also possible. But this is yet another way in which securities can be created. Any other way in which securities can be created? I can just add to the rights issue, or you can even come up with bonus. Of course, in bonus, I'm giving away my shares free of cost. I'm giving away my security without charging anything. But am I not creating a new security? Primary market is all about creating new securities. And these are the different ways in which new securities can be created. Very quickly, if you are in need of huge sums of money, approach the public at large. Relatively smaller sum of money, then I can go for a private placement. I can even come up with a rights issue, right? And in case if I want to reward my shareholders for the investments that they have made in my company, I can also give them securities without any consideration. And that is what gives rise to the bonus issue. So these are different ways in which you can create a security. Now, if someone tells you that as an investor, I'm dealing in primary market, what does that mean? If someone tells you that I deal only in primary market, that means this person is someone who invests in public offers. See, as a small investor, I will not be eligible for private placement. Private placement means a company will be selling shares to high net worth individuals, people who are having huge sums of money. People like you and me don't have huge sums of money, and that is the reason we will become a part of the public in general. So when I say I deal in primary market, or you are having discussion with someone and that person says that no, I deal only in primary market, I don't do much dealing in the secondary market. What does that mean? When someone says that I'm dealing only in primary market, it means that that person is basically investing in public offers of shares. So from time to time, different companies are offering their shares to the public at large. If I am someone who deals in the primary market, I will apply for those shares. Yes, a lot of luck is required, but let's say the shares are allotted in my favor. If the shares are allotted in my favor, I will wait for the shares to get listed on the stock exchange. So today a company comes up with a new public offer. I will apply for the shares. Let us say the shares are allotted to me. The day when the shares are listed, I will normally sell away the shares. The idea is that I will apply for the shares at a particular price. I will hope that the listing of the share happens at a price which is above my offered price. And the difference between the two is the profit that I'm planning to book. So when someone says that I'm dealing only in primary market, this is the modus operandi of that particular person. That person will apply to the shares, wait for the listing day. But as I said, a little bit of luck is required. It is not necessary that shares will be always allotted in your favor. But if the shares are allotted, my game plan is I'm hoping that the shares get listed at a price above the price that I have paid to apply for the same. And if that happens, I will sell the shares at a profit. So that is how I can trade in the primary market.
Press the bell icon on the YouTube app and never miss another update.